Good day, Junior Techies. I'm Mrs. Primacone. We are going to look at adjustment, where the focus now is going to be on a combined activity. So if we look at activity 11, question number 1, place the following year-end procedures in the correct sequence. Question number 2, calculate the correct net profit using the profit and loss account. So to pause for a minute there, when we get this type of question in a test or in an exam, it means that the adjustment has been done. They've calculated the net profit for the year. But now there are several adjustments that still need to be taken into account, which means that I'm only now going to look at that specific adjustment. How would that affect the net profit? In other words, if my income increase, how would that affect the net profit? If my income decrease, how would that affect the net profit? The same as with an expense. If my expense increase or if my expense decrease, how would that affect the net profit? We don't look at what was our total income or expense for this accounting period over 12 months. Remember, accounting period, we look at income and expenses for 12 months. The focus is basically only at the adjustment amount. Question number 3, complete the following accounts in the general ledger, the current account for Jason and Susan, and then the appropriation account. Question number 4 refers to adjustment number 5. The partners are very concerned that this kind of errors can be made. So here we're looking at internal control, which is incorporated. Information number A is the list of balances of baby boom suppliers as at 30 June 2021. If you now look at the adjustments, it says the accountant calculated the net profit for the year to be 998,190. But there are several adjustments which have not been taken into account. So now we need to look at all of these adjustments and see how would that affect the net profit which has already been calculated. Place the following year-end procedures in the correct sequence. Question number 1. So this is important to understand. Preparing a pre-adjustment trial balance. From there, we are going to complete our adjustments in the general journal and then post it to the ledger. From the ledger, we compile a post-adjustment trial balance. A post-adjustment trial balance consists out of the balance sheet account section and the nominal account section. Now we're going to move on to the closing transfers. That is done in the general journal and then posted to the ledger, so that we now can complete the post-closing trial balance. A post-closing trial balance has no nominal account section and no drawings, because nominal account section, which consists out of all my income and expenses, will be closed off to the current account. The net profit is calculated in the appropriation account. From there, the final distributions is taken to the current account. Drawings is closed off to the current account. Then we prepare the financial statements, analysis and interpretation, and then we need to complete the reversal entries. Now this is imperative that you understand the difference between the pre and post-adjustment trial balance, the post-closing trial balance. Why? Because if they provide you with a pre-adjustment trial balance, a post-adjustment trial balance, a post-closing trial balance, you need to know how would I then use that to complete my financial statements. So question number 2, calculate the correct net profit using the profit and loss account. The net profit has been given to you, and now we need to look at all the adjustments to see how will this affect the net profit. So we treat this profit and loss account as an owner's equity account minus plus, because the net profit has an effect on the owner's equity. Adjustment number 1. The rent for July and August was paid during June 2021. The total rent paid for the year ending 30 June 2021 was $203,000. So if I look at this, we have paid the rent for July and August, which means that is 2 months in advance. This means that 2 months must be taken out. So to calculate that, we're going to say 203,000 times 2 divided by 14. And that equals 29,000, which should be taken out, which means rent expense is going to be credited and prepaid expense is going to be debited. So how does this affect the net profit? If my rent expense decrease, it will have a positive effect on the owner's equity. Therefore, profit and loss account will be credited with 29,000. Adjustment number 2. The telephone account for June 2021 have not yet been paid 1,200. So this means telephone, this will be added to my expense for this accounting period. Account credited, accrued expense. How does this affect my net profit? If my telephone, which is an expense, increase, it will have a negative effect on the owner's equity. This means that the profit and loss account will be debited with telephone 1,200. Adjustment number 3. The depreciation was calculated incorrectly on equipment. The bookkeeper calculated the depreciation at 20% per annum instead of 15% on cost. List of balance of baby boom suppliers as on 30 June 2021, equipment 120,000. So what is happening here? Depreciation was calculated at 20%. Instead of, it should be 120,000 times 15%. So to correct this, depreciation was calculated 24,000. It should be 18,000. This means that we need to subtract 6,000. Now, as soon as my expense decrease, it will have a positive effect on the owner's equity. This means that my net profit, in my profit and loss account, we're going to add 6,000 to the net profit. Adjustment number 4. Provision for bad debts must be adjusted to 5% of the book debt. My debtors control balance was 98,000. Book debt is equal to the debtors control, which means that we need to take 98,000 times 5%. My provision for bad debts is 4,000. Remember, this is a negative asset. The balance is 4,000. It should be adjusted to 4,900. The difference is 900. Provision for bad debts is credited. Account debited, provision for bad debts adjustment. If it appears on the debit side, you know it's an expense. Also, you should know if we need to increase the amount, it means that it will have an expense, or it will be an expense to the business. Because my expense increase, this will have a negative effect on the owner's equity. Therefore, profit and loss account is debited with provision for bad debts adjustment 900. This will have a negative effect on that net profit. Adjustment number 5. The accounting clerk responsible for salaries and wages duplicated one employee's salaries in the salaries journal. This error must be corrected. Details are as follow. The net salary, 8,580. Deductions consisted out of UIF, 1%, pension fund, 7.5%, and pay-as-you-earn, 20%. Baby boom supplies also contributes on a rand-for-rand basis to the UIF and the pension fund. So what makes this more challenging? They didn't provide you with the gross salary. Remember that the gross salary appears in the salaries and wages account, which will end up in the profit and loss account. The net salary will go to creditors for salaries, which is a liability in the balance sheet account section. Secondly, they also did not provide you with figures, UIF, pension fund, pay as you earn. They only provided you with the percentages, which makes it a bit more complicated. So how do we approach this? The gross salary is always equal to 100%. The total deductions, 1% plus 7.5% plus 20%, equals 28.5%. So 100% minus that equals the net salary, which is equal to 71.5%. So to work out the salaries, we are going to take the net salary times 100 divided by 71.5. That equals the gross salary. To work out the UIF, we can take the net salary times 1 divided by 71.5, or you could take 12% and just times it by 1%. That will equal the UIF contribution 120. With the pension fund contribution, take the net salary times 7.5 divided by 71.5, or you can take the gross salary and times it by 7.5%. It will provide you with exactly the same answer. So, what is happening here? These are all my expense accounts. It was entered twice. It was duplicated by mistake, which means that we need to take it out, which means our expense account will decrease. If our expense account decrease, it will have a positive effect on the net profit. So in my profit and loss account, on the credit side, we're going to have salaries, 12,000, UIF contribution, 120, and pension fund contribution, 900. Adjustment number 6. During a burglary at the shop, 700 was stolen from the petty cash box. The insurance company will pay out 400 during July 2021. July 2021 is outside of our accounting period, so this is still outstanding. To show the total loss, in other words, the 100%, petty cash will be credited with 700. Account debited, loss due to theft. What the insurance company is going to pay us out will go to accrued income, which will be debited with 400, account credited, loss due to theft. So in my loss due to theft account, I need to calculate what is the loss that I occurred, or the loss which was made, by taking now 700 minus 400 equals 300. And that is the amount that should appear in your profit and loss account. So this will have a negative effect on the net profit which was calculated. Adjustment number 7. An insurance premium, 1,320, on one of the policies was paid and recorded on the 1st of April 2021. The policy expires on 31 March 2022. So if I look at my accounting period, it ends June 2021. Anything outside of that period must be taken out. So what should be included is only from April until June. So to calculate the amount that should be taken out, we are going to take 1,320 times 9 divided by 12. Insurance is going to be credited, account debited, prepaid expense. Because my expense decrease, it will have a positive effect on the owner's equity, which means that it will increase the net profit. So in my profit and loss account, on the credit side, I'm going to have 990 insurance. Adjustment number 8. The physical stock take revealed a trading stock deficit of 7,600. The bookkeeper erroneously recorded it as a surplus. Correct the error. So if I look at what has been done in the profit and loss account to calculate the net profit, we said that the trading stock was a surplus of 7,600. So that was done incorrectly. To correct that, we need to debit the profit and loss account to show that this was actually a trading stock deficit. But now, to take it out, I've only cancelled that 7,600. I still need to show the deficit. This is why, when we need to correct this, we need to times it by 2. This will have a negative effect on the net profit. So on the profit and loss account, on the debit side, we're going to have trading stock deficit, and the amount must be 15,200. Once we've now completed all the adjustments, we can calculate our new net profit. And where do we close this off to in a partnership? It must be closed off to the appropriation account. So take the credit side minus the debit side, and that equals my correct net profit for this accounting period. Question number 2. Completing the current account for Jason and Susan and the appropriation account. Now, before we start with this question, just to recap, the current account always consists out of primary distributions of profit, which consists out of salary, bonus, and interest on capital. Final distributions of profit or remaining, which is calculated in your appropriation account. So this account will reflect what the partner is entitled to and what the partner has actually taken from the business. This is why drawings is closed off to the current account. Now, if we look at basic salary allowance to Jason is 50,000 per month, which means that the current account is going to be credited of Jason, account debited, salary, Jason, amount 50,000 times 12. Basic salary allowance to Susan, 35,000 per month. The current account is going to be credited for Susan, account debited, salary Susan, with 55,000 times 12. Bonus to Jason, 40,000, which means that the current account, Jason, is credited with 40,000. There's no calculation involved here. Bonus, Jason, will be debited. It's an expense. Bonus to Susan is 20% more than what Jason received. This means that current account Susan is going to be credited with 40,000 times 1,2. That 1,2 means 120 divided by 100 equals 1,2. Interest on capital is calculated at 8% per year. On the capital balance, it means that the current account for Jason is going to be credited, account debited, interest on capital. We do not have an individual account for interest on capital like we do with salary and with bonus. For Susan, 200,000 times 8%, the current account is going to be credited, account debited, interest on capital. Now, profit and losses to be shared between Jason and Susan in the ratio 2:1. So we've now looked at all the primary distributions of profits. The final must be calculated in the appropriation account. We have now calculated the correct net profit in the profit and loss account. This must be taken to the appropriation account. So the profit and loss account is debited, account credited, the appropriation account. Now, if we look at what is a partner entitled to the primary distributions of profits. Salary Jason, 360,000. Salary Susan, 420,000. Bonus Jason, 40,000. Bonus Susan, 48,000. Interest on capital. Make sure that you always add the total interest on capital. For Jason, it was 25,600 plus 16,000 for Susan. That equals the total interest on capital. Show your calculations in brackets, in a test or in an exam. If we now look at the total primary distributions of profits must be subtracted from the net profit so that we can find out what is the remaining that should be distributed. So the net profit minus primary equals the remaining profits of 120,000. And this must be shared in the ratio 2:1. So to calculate Jason, it means that we're going to say 120,000 times 2 divided by 3. For Susan, 120,000 times 1 divided by 3. If you've calculated Jason 80,000, you can say 120,000 minus 80,000. It will provide you with exactly the same answer. This means now that the appropriation account is going to be debited with current account Jason, 80,000. Current account Susan, 40,000. If you add the debit side, it should equal the credit side. The appropriation account is going to be debited. Account credited, current account Jason, 80,000. Current account Susan, 40,000. Now we need to close off drawings. Drawings would have been credited, account debited, current account, drawings, Jason. The partner's name must be written. For Susan, drawings Susan would have been credited, account debited, current account Susan, 498,000. Once we've now shown what the partners are entitled to and what they've actually taken from the business, we can calculate the new balance. To calculate the new balance for Jason, take the credit side minus the debit side. That equals balance carried down, balance brought down, 37,100. For Susan, take the credit side minus the debit side. Now Susan is ending up from a debit balance to having a credit balance, a positive balance of 20,900. Remember that the current account is an owner's equity account. So if they have a debit balance, it means negative. Credit balance means positive. Question number 4, see adjustment number 5. The partners are very concerned that this kind of errors can be made. Name 2 control measures that can be implemented to avoid this from happening again. So the adjustment was the accounting clerk responsible for salaries and wages duplicated one employee's salaries in the salaries journal. So the first thing to try to prevent this from happening again is make sure that there's segregation of duties. The person that prepares the salary journal should not also be responsible for making salary payments. A senior person should review the work of the person that prepared the salary journal. Physical verification of employees to ensure that there are no fake employees on the payroll and in the salary journal. Thank you very much. This concludes now this chapter on adjustments. It is very important that you practice as many as possible past exam papers. I hope this question showed you the different ways in which it can be asked. I want to leave you with a quote. A little progress each day adds up to big results. Hope you have a wonderful day.